Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only, and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. On Friday, the market was very choppy after the better than expected US job numbers surprisingly surged last month, doubling more than expected in July's forecast. While the unemployment rate ticks lower, it has given the US Federal Reserve enough cushion to stay on its rate hike path as it tries to cool inflation. The non-farm payrolls increased by 528,000 in July, the Labour Department employment report showed, beating all estimates and was the largest increase in 5 months, while the June numbers were revised up to show payrolls rising by 398,000 instead of previously reported at 372,000 jobs. The unemployment rate ticked down to 3.5%, equaling the figure in February 2020, which was a 50-year low. Looking ahead to this Thursday, all eyes will be on the US CPI number and therefore could seal the knot, so to speak, in terms of what the view will be on the next rate hike from the US, whether it's going to be slightly dovish or more hawkish. Looking at the Australian dollar, we can see that the market on Friday did challenge both sides of the range. That is roughly on the lows of 68.70.80, which found a rejection there, and the top side, which was close to around 69.50.80 area. In light of the pattern, is a little bit weaker for the start of this week, and therefore could see another down test. But from the intraday view, that I feel the market should stage another rebound from that 68.70.75 level, and eventually slowly recover back towards that 70-cent handle. The dollar index, which measures the greenback strength against a basket of 6 major currencies, was a little bit whippy, but ended up at 106.40. This also saw a very broad range for the euro, as the market challenges the bottom side of the range briefly at 101.1535 and then rebounded from the top side. And as you can see, the market is a little bit, from the close of New York, a little bit uncertain in terms of direction. However, keep an eye on these technicals. They haven't fully broken down. So therefore, I feel for the start of this week that we should see 101.1535 to potentially hold, and therefore see a slow rise back to that top side of range, which is still holding around 102.70.80. With the dollar showing potential increase from Friday, has supported dollar yen to rally further and posted an engulfing candle. Keep an eye on the current price action. The market did clear 134.20.40, which is now put on the path to the range of around 135.25 to 135.80, and then maybe from there see a retreat back towards the bottom side, somewhere around 133. In light of the pattern, it is still stronger considering the market's rebound, and also from the recent week, price action has now broken through the midway point, and with the MACD shaping up a little bit more to the firmer side, has given further indication for a further rise, as I mentioned, towards 135.25 to 135.80 and reassess. To some surprise, the market was very heavy on Friday for sterling, and the market turned back towards that bottom side around 120.60 and did break it, and given now a little bit more room to the downside around 119.5. Although the call was at the time from the recent decisive price action that we could have seen, or potentially seen, a further rise, but from Friday's weakness and the dollar strengthening has put a little bit of a dampener on that view. Nevertheless, I'm not going to get bearish around that 119.5, as we could see another rebound and eventually see the climb back towards that 122 to 124 area. On Friday, I mentioned there was some bearish divergence, as you can see, with the indicator peaking and then posting a slightly lower low, and therefore the peak on a couple of days ago and then another high. You can see that we did get a bit of a broad sell-off, but nevertheless didn't quite break down to support an initial further slide. With the support seen still around 1,755, we need to break that level to give the negative call back to the region of 1,700. But until then, let's see the market probably most likely range within 1,755 to around 1,800. Wrapping up with oil, I was neutral on Friday, and I still like to probably stand there for the moment in a neutral bias or on the sidelines. We've got an inverted hammer here or close to that, and the market is a little bit indecisive in where we currently sit. However, there is still room, possibly down towards $86 a barrel, but as I mentioned before, I am a little bit uncertain to that call, given the fact that we are oversold, but the ADX is trending and is supporting a bear case. Still, we can easily get a whipsaw price action back to $93 a barrel, so I'm a little bit careful on the call at the moment. I would rather give it another 24 hours and see where the market lies on Tuesday. Well, that wraps it for the morning. Thank you very much for joining me. As always, grab the intraday report. I hope you enjoyed the great start to the new week.